Oil prices. How do we trade them under the current macroeconomic environments? Let's take a look. Now, right now I'm on Art Berman's blog. Art Berman is a premier oil blogger. He is one of the most reliable sources a trader can have when it comes to any real fundamental data on the oil industry. I'm looking at his slides. Of course, I'm not claiming any of this work as my own, but I want to take a look at some of the points he has made here. Now, take a look at this line. Economic depression is unavoidable. Yes, we will get that line from a number of places, and it's horrible, yes, but we're not talking about that yet. Second, oil prices, no, not that one, here. People are reluctant to accept new paradigms, recent price rallies driven by sentiment and geopolitics, but not supported by fundamentals. And I will touch on that one. So, coronavirus now adds to the long list of oil market problems. Something I wanted to show you guys is these two charts here, where what he indicates is the relationship that oil has always had to GDP. All right, so let's go to the charts. Here we can see this is WTI crude, and we can see the massive sell-off. Of course, we know the fundamentals. Saudi Aramco is overproducing oil. Russia is competing for market share. US has become a net exporter of oil. And coupled with all of these oversupply factors, what we are looking at is a significant drop in the demand for oil due to the coronavirus lockdowns. So now we have less planes, less trains, less cars, less everything using oil on a day-to-day basis. So we are looking at a combination of a supply shock, massive supply in the markets, and a demand shock where there is virtually no demand in the markets. What is going to happen to the price of oil? Let's take a look. Now, let's take a look at the 5-day charts, or 1 week. Okay. Oh boy, sorry about that. Zooming in a bit, dancing about. Okay, so we can see massive selling off, gapping down. We can see all of this sort of action happening here. But one thing I wanted to show you guys is that oil cannot seem to go up no matter what. Now, last year, there was a drone attack on Iran, on an Iranian production plant. That only shot up oil to just over $63, I believe. Typically, something as significant as that would have sustained a larger rally. However, that reversal came just a few days after. Second, this year in January, we had the assassination of General Soleimani. That gave oil prices another massive rally, just to about $61 per barrel. Then that reversed as well. If these massive fundamental influences could not inspire a significant rally in oil, something is wrong. Something is very wrong. And the bear market in oil was officially indicated to me and to a lot of other people who were following this information. So, what are we looking at this week? Continued weakness in oil. Alright, so we're looking at a slight recovery today, as we can see that we are at these lows at around $23 per barrel. We got all the way down to 19. I traded some of this on the downside, and I didn't catch all, unfortunately. But I know some people who did, and they did very well there. I actually have been following a lot of traders who were in on the oil sell-off from early this year, just from following the issues with the, not just the coronavirus phase, but with the lack of sustained rallying through the 2 points I just raised. So why isn't oil going any further, and what are the deeper fundamentals here? Well, we know that most oil producers are not profitable with oil priced anywhere below $41 per barrel. As far as I remember, for Saudi Arabia to be profitable exporting oil, they need oil prices as high as $80 per barrel. So a number of oil producing nations are actually looking at reduced incomes as a result of this. So this is not something that is sustainable for the oil industry by any means. But is this fundamental situation looking at being resolved anytime soon? Let's take a look. This is an article from, I got it from oilprice.com. It was outsourced somewhere else. Some other content producer put it up on oilprice.com. Saudi Arabia is prepared to oversee extra supply cuts of several million barrels per day, according to several people familiar with the matter. But only if non-OPEC producers, including Russia, take on their share of the burden, which has been a point of contention at the most recent meeting of ministers. The idea here is that they are competing for market share. As the US has become a net exporter of oil, we are looking at everyone trying to gain their fair share of sales of oil for their nation and their respective companies. And having the United States now enter that market as a net exporter was not something that would have made the non-OPEC countries happy. So we are looking at Russia directly competing with Saudi Arabia to drive the prices of oil down. So when Saudi Aramco dropped their oil prices, the price gapped down. And this is not looking like it is slowing down. However, there are meetings that are coming up this week and in the month of March that would have some influence according to the data that is released. We will be keeping our eyes on that. Until any of these fundamental factors change, we will continue to be bearish on oil. This is WTI. This one is Brent crude oil, where we can see pretty much the same thing. A drop down. Brent is typically just about $4 to $5 more expensive than crude. And here we can take a look at the oil volatility index. Hold on, I do not know why that did not load. Let me see if there's something wrong here. So what I will be expecting is an opportunity to fade the rallies. I am not buying into any temporary rallies on oil until the fundamental bias on oil shifts to something bearish. All right, let's take a look at my chart on the commitment of traders data. So WTI, we have seen a reduction in the long positioning from money managers, but we've got more traders in the markets. It's gone from 108 to 120. However, we've also seen a massive reduction in short positioning from traders, going down by 67,000 contracts. But also that is because of a reduction of participants, not necessarily a reduction in, or a change in sentiment. So what we're seeing is 119 participants went down to 86 participants. So that was people liquidating their assets and not participating in oil on the downside, but not participating in oil or not shifting their bias to the long side either. So what we could be looking at is a patience game, a waiting game, where we are waiting to see the effects of the US economy's infinite QE policy on the oil markets. We will see how that shifts the sentiment, but as far as I'm concerned, all of the fundamental data states clearly that we are looking at incredible bearishness in the oil markets. Now let's take a look and see if this loads up. If it doesn't, I'll just pull up some charts on TradingView. What I wanted to show you would be USD CAD and the depreciation of the Norwegian krona. Now, Norway, they are, okay, I don't know what's going on with the servers here. Allow me to just pull up TradingView and we will take a look at that. So, sorry about that, guys. Now let's take a look. Norway exports oil, and we can see that there is a direct correlation between the value of their currency and the oil prices. Let's take a look and see this very easy, very obvious trade that anyone could have taken throughout the last week, and this trade may continue throughout this week in the currency markets. Sorry for the reduction in the speed here. It's just giving me a little bit of trouble. Okay, so this is the USD versus the Norwegian krone. Now, this is the USD, so we know that the USD actually rallied recently. So maybe it's not a fair comparison to compare a currency that has its value directly tied to the value of oil as well as the world's reserve currency. Okay, they would have obviously gone in opposite directions. This is the monthly chart, by the way. So let's take a look at the daily chart. Okay, we can see a massive increase in volatility. All of these candles are much larger, much greater average daily range here, and we can see this massive rise. But let's take a look at a weaker currency as compared to the Norwegian krone. Let's use the Australian currency. That currency is incredibly bearish at the moment, and even the Australian dollar, when compared to the Norwegian krone, has appreciated. Now, anyone who's trading knows that the Australian dollar is one of the weakest currencies out there to trade. I shouldn't say the weakest, the most bearish currencies out there to trade. Let's take a look at their chart. Relatively speaking, it's been an incredibly bearish few years, actually. Let's take a look. On the monthly chart, going back to 2012, it's been a massive bear market here on the Aussie versus the USD, and even this currency has appreciated against the Norwegian krone, showing you the true fundamental drivers behind the oil markets are having an influence across multiple assets. So the sentiment for oil going into this week is bearish. We will be fading any rallies as well as looking for correlations with the oil fundamentals and trading those as well.